Welcome back. Nike's earnings came in mixed, but that report is really being overshadowed by news of layoffs coming at the company. We've got Yahoo Finance's Emily McCormick here with more on that. Emily, what do we know?
Well, Alexis, taking a look here, we did have the Oregonian first reporting that Nike is eliminating more jobs following a large round of layoffs that the company first announced last summer. And we don't know exactly how many layoffs or how many positions are going to be impacted in this latest round of cuts. But what the company actually said in a prepared statement to the newspaper was that the company was, quote, focused on shifting resources and creating capacity to reinvest in our highest potential growth areas, end quote. So we do know, based on the previous round of cuts, that there were about 700 Oregon-based jobs through January that had been eliminated. And again, more to come, as reported by the Oregonian. But taking a look at what we heard out of Nike last night, that company reporting fiscal third quarter sales that disappointed against Wall Street's expectations. We do see the stock trading lower intraday today as a result of that. And two big factors really weighed on Nike's results. That was supply chain issues in North America, as well as store closures internationally due to the pandemic. Now, we saw that North American revenue was down 11% on a currency neutral basis to $3.6 billion. And that drop came mostly due to global container shortages and port congestion in the US and especially on the West Coast. So that did hurt inventory and the timing of their wholesale shipments. And then turning internationally, their geographical Europe, Middle East, and Africa sales fell since 45% of their Nike-owned stores in those regions did experience pandemic-related closures for most of the quarter. Now, at the same time, do want to highlight two positive factors that we saw out of Nike's earnings report yesterday. And that was that digital sales and sales in China came in better than expected. We saw digital sales up 59%, and then Greater China sales extended a streak of double-digit increases, rising 42% year over year. Now, again, we are seeing that stock selling off about 3.5% in intraday trading. But overall, Wall Street does think that this company is something that has been investing towards the future, investing in its digital capacity. So that's something that could help it down the line, Alexis.